Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial jargon and turn it into something you can actually understand. Today we're diving into a report from UMB Financial Corporation, and let's just say sometimes the most exciting news is a simple announcement about paying back debt. So UMB Financial Corporation is letting everyone know about a plan they have in motion. It's August 2025, and they're talking about actions happening later in the year, specifically on September 17th. What are they doing? They're going to redeem, which is a fancy word for paying back a specific type of their debt. Think of it like paying off a loan early. This particular debt is called their 3.7% fixed-to-fixed rate subordinated notes due in 2030. They're paying it all back. And how much will this cost them? Well, they'll be paying back the full amount of the debt plus any interest that has piled up but hasn't been paid yet, right up until that September redemption date. It's like closing out a credit card completely. Now they're super clear about something. This announcement isn't trying to sell you more of these notes or buy them. It's just giving you the heads up that they are handling this debt. They're basically saying, hey, we're paying off this specific borrowed money and this is how it's going down. The company itself, UMB Financial Corporation, is based in Missouri. They're a pretty established player in the financial services world. You might know them because their common stock trades on the NASDAQ under the symbol UMBF, and they also have preferred stock listed there as UMBFO. Their main stocks, the ones that regular people can buy and sell easily, are their common shares. They're doing pretty well with the stock trading on the NASDAQ Global Select Market, which is a big deal, meaning it's part of a major stock exchange where a lot of trading happens. They also have preferred stock, and this filing mentions their Series B preferred stock, which is traded as depository shares. These tend to be a bit more stable than common stock and often pay a fixed dividend. It's another way for the company to raise money and for investors to get a return. This particular piece of news falls under something called regulation if disclosure. This basically means that when they share important information, they have to share it with everyone at the same time. They can't give a heads up to just a few people. This report ensures they're playing fair with all investors. Now, like many big companies, they include a standard warning about forward-looking statements. This is pretty common boilerplate. They're saying that some of their words might talk about the future, like expectations or plans, but a lot of things could happen that might change those future plans. Things like economic downturns or even global events like instability in the Middle East or actions in Ukraine can mess with their carefully laid plans. They're basically saying, don't bet your house on what we think will happen because the world is unpredictable. And who is signing off on this important announcement? It's Ram Shankar, their chief financial officer. This is the guy in charge of the money, so when he signs off, it means the executive team is aware and approves of this message. The date of this report is August 27, 2025, right when they're making this announcement about their debt redemption plan for September. Now let's put this into perspective. UMB Financial is essentially telling the market that they are financially healthy enough to pay off some of their long-term debt early. This is generally a positive sign. It means they have enough cash on hand or readily available credit to cover these obligations rather than struggling to meet them. They're choosing to eliminate this debt, likely because the interest rate of 3.70% might be higher than what they can secure now, or perhaps they just want to simplify their financial structure. By paying off these notes, they reduce their interest expenses, which directly boosts their net income, making the company look more profitable. It also reduces their overall leverage, meaning they have less borrowed money relative to their own capital, which is usually viewed favorably by investors and credit rating agencies. It shows strong financial management and a commitment to improving the company's balance sheet. While this report doesn't give us deep financial move to optimize their capital structure and potentially improve profitability by reducing interest costs, it's a quiet but important signal to the market that they are in a solid financial position. This kind of move is often a sign of confidence from management in the company's future earnings potential, as they are willing to commit funds to debt. Alright, that's our breakdown of UMB Financial's recent filing regarding their debt. What's your take on this move to pay off their notes? Does it signal strength or something else to you? Drop your thoughts in the comments below. If you found this clear explanation helpful, please hit that like button and subscribe for more Decoded Finance news. And don't forget to join our growing community on Discord, where we chat all things business and finance. The link is in the description. Thanks for watching, and I'll see you in the next video.